Now we have a very interesting clip to show you guys today of Charles Gasparino explaining high frequency trading systems and how the market is rigged, and also how the market is not rigged. Lewis tells us that behind the license number is an incredible but true Wall Street story of hypocrisy and secrecy, and then on that cliffhanger ends the book. So I guess it's not really a spoiler to tell you that one of the companies behind that untold story is in fact Virtu, which ended up indefinitely postponing its IPO in the wake of the Flash Boys release. Now Michael Lewis, in the new bestseller, focuses the public's attention on high frequency trading. In his new book, he portrays Virtu as the bad guy, and they further postponed their IPO. But does this have to do with the book? Here's a quick clip from Charles Gasparino.
High-frequency trading firm Virtu Financial playing it safe, or was it forced to delay its IPO after buyers started to hesitate? Charlie Gasparino joins us now with the exclusive, what he believes is the real story here.
Yeah, I mean, listen, why did they hesitate? Because you had this new book by Michael Lewis that came out. There's a lot of regulatory attention on it. The book forced the regulators to come out and say, we are looking at this. We were the first report on the Fox Business Network that DOJ is looking at it. So here's what we do know. When that happened, the institutional investors and what's known, quote unquote, as the incremental buyer started to balk at buying the Virtu IPO. The buyers, the people that would buy this thing, particularly from an incremental standpoint.
So it didn't have to do with the Michael Lewis book?
It had to do with once all the investigations came out, the notion that there's going to be increased heightened regulation that would decrease Virtu's profitability.
Now this isn't the end of the clip, but Charles Gasparino says it doesn't have to do with the book. In fact, it has to do with these things. And the first thing he mentions is further regulation, which would decrease Virtu's profitability. But why would regulation decrease Virtu's profitability? Also, if it's not the book, then why did coincidentally, when that book hit, Virtu postpone their IPO indefinitely?
Institutional investors began to balk at the IPO, particularly what's known as the incremental buyer. What does that mean? That means when the thing is almost all sold, where you need that extra buyer in there to keep the IPO price up, they were balking. Now, we should point out, there's a little bit of revenge, from what I understand, from institutional investors going on here. They, listen, they buy Virtu's IPO. They're going to be Virtu's owner. Virtu's a high-frequency trading firm, which, if you believe Michael Lewis and some of these buy-side guys, some of these institutional investors, he's been screwing the institutional investor for years from jumping ahead of their order. So what we have here is a bit of revenge and a bit of worry on the part of the incremental institutional investor.
Institutional investor revenge from a high-frequency trading firm jumping ahead of their orders. Pay very, very close attention to what he keeps saying.
That Virtu is not all that it's cracked up to be. That its profitability going forward is not going to be what's in the past. So
could be affected because Michael Lewis's book brings in a bunch of sunlight and sharp light.
I think Lewis comes out with the book. I think what the book did was force the feds. And we were the first to report this, that the U.S. Attorney's Office is looking at this. But then you see Mary Shapiro. And here's the real problem.
She had been doing it.
She's been doing it for a while. But here's the real problem. And when you get this much media chatter, like us talking about it, I've read most of Michael Lewis's book. In the next couple of hours, I'll be finished with it. I will tell you that I think it's a good read. I think it's baloney. Though the high frequency trading is not ripping off the average investor.
He literally just said that it was ripping off investors by jumping ahead of their orders, but not the average investor, and he's going to explain why. He's going to explain how Lewis's book is absolutely a bunch of baloney and how high frequency trading firms don't affect the average investor.
High frequency trading is not a net bad, or we don't know enough about it to say it's net bad. What he talks about a rigged market is baloney. The markets were rigged because there are 40 different trading venues. Guess what? Dark pools allowed by regulators, the SEC in particular, and these smart guys figured out computer programs to sort of to game that system. That is not a rigged market. That's a market created by regulators. So that's the upshot. But
Can I just say something?
It's not a rigged market because they figured out how to, in quote, game the system. This is a market created by regulators. These are the things that he states. In other words, he says game as in cheat the system because he couldn't say cheat the system.
While you've been talking, the Dow Jones Industrials hit session highs.
That is the
We're
second.
all about everybody's money.
But that is the second part. It's a rigged market. If you bought an S&P 500 fund, ladies and gentlemen, forget about even 500 shares of Apple, because if you bought 500 shares of Apple through your broker, these high-frequency guys don't even care.
Breaking news, Dow hitting an all-time high. Same with the S&P 500, by the way.
Think about it this way. You bought it at its low, bought an S&P 500 fund at the 666 low. How about those three numbers back in 2009? And look where the S&P is today. Where's the S&P right now?
1891.
Okay. Tell me that's a rigged market. You're losing money in that market.
Well, let me just say, though, that over time, since 1930, the stock market has returned anywhere from 9 to 11%.
I think this market is rigged by a lot of things, like Fed printing money.
Well, how about this?
It's not rigged by what Michael Lewis has said. And
back in the day, and I know your dad was probably around my dad's age.
Right.
We used to get the LA Times, and he'd open it up in the morning, and he'd say, "Let me see how my Kodak stock did." And he'd say, "You know, Liz, the big boys in New York knew this yesterday."
Yeah,
but,
I mean, it's
but
always
us suckers in LA had.
But you know, that's why. And here's how you get around having to compete on Wall Street, because the big boys in Wall Street always know there's always been front running. Here's how you do it: become a long-term investor. You know, and know when to get out of the market in a long-term basis, know when to get in a long-term basis, and be sort of macro. If you're gonna fight these guys on their own turf, I don't care how many Michael Lewis's are drawing attention to high-frequency trading. You're always going to lose.
Charlie Gasparino at the helm with me when we just hit an all-time high for the Dow Jones Industrials, and same with the S&P 500. Closing bell.
So his word on high-frequency trading systems is basically you cannot beat Wall Street. The average investor can't invest into stocks and win because of the way it's set up and because they get front-run the news. But it's not a rigged market, because if you invest long-term in an index fund, then you'll be fine. Overall, guys, this is just another word from this scumbag who protects criminals. We've seen it time and time again. When facts are stated, he is used in the media to deflect them from these big companies, from these big players, and he is sort of the spokesperson to draw attention away from them and to somewhere else and put the blame on something else. He does this all the time. He has done it with AMC stock, for example. When the facts are brought up about an institution, he will come out and say that maybe that happened, but however, it's retail's fault because of this, then that. High-frequency trading systems may be this, but Michael Lewis's book said this, so it's not that, and regulations did this, so it's not that. Virtu was the main problem, but then Charles Gasparino, the middleman, the spokesperson for these institutional investors, for these players in power, said, listen, I'm going to deflect this, and I'm going to show it that regulators are the problem, that retail investors are the problem, because they should be investing long term. He is there to deflect situations. It's just like when you see Jim Cramer talk. Same thing as when you see Charles Gasparino talk. Not only take it with a grain of salt, but probably think the opposite. Overall, guys, let me know in the comments what you think about this, what you think about high frequency trading systems. We see it time and time again in the stock market. We see it even barcode specific stocks, and we see algorithms and cycles play out time and time again. Overall, guys, I'm going to be uploading this video at night, and if you didn't see the upload I posted earlier, make sure to go watch that AMC video market wide squeeze that I talked about. Also, if you want to talk with me on the daily or request videos in the Discord, the link is right under the description. It's literally $1.99. You guys will not regret it. This Discord you will find on YouTube. The most amazing people are in there. Get in before the price goes up. Plus, if you guys want a bunch of free stocks for doing absolutely nothing, you can use my link and download Moomoo, and once you sign up and make a deposit of even a penny, I know you guys all have a penny, you will start earning benefits from there, so make sure to go do that. Both of those links are in the top of the description and pinned in the top of comments. I love you all. Lottery Stocks out.